So today we are living in an era where people appreciate the value of passive investing. So the best way for passive investing is investing into index funds or bullion funds. So now let's look into three major factors that you need to consider while selecting a best index fund. So let's look at how to choose best index fund for your passive investment, right? So first thing you would have to do is a risk assessment. So for risk assessment, like based on your risk appetite, you can categorize yourself as moderate or higher risk kind of a person. So if you are a moderate risk taking person, you should actually look at large cap or hybrid kind of flexi cap funds, which are very stable. Or you can actually look into something like a silver or gold investment, which are more stable, or you can actually look into broad thematic funds, something like into information technology or something into financial sector or manufacturing, something of broad thematic. But if you are of a higher risk person, you should actually look into something like a narrow thematic, something like a private banks within the financial industry, right? Something of a private banks fund. Or if you can also look at factor based funds, something like a momentum 50 out of 250 stocks. So these are factor based indices funds, right? So you can look at those. Now, second thing you should look at is low tracking error and low expense ratio. So expense ratio, higher expense ratio means more expense towards other cost, right? And basically, it will be kind of getting reduced from your investment return. So you should look at low expense ratio and low tracking error as well. A tracking error is the deviation from the index return of your fund, the mutual fund. So you should look at less deviation from the index and low expense ratio. So this would basically come from trading cost and rebalancing and reconstruction charges, right? So the third is higher AUM. Like why I focus on having a higher AUM fund is the impact of any daily activity of investor, such as redemption or any investment into this fund, will be very low. So that can actually impact your expense in turn, impact your expense ratio. So this should be minimal to get best return. So this is three major aspects you can actually look into while considering index investing as a passive strategy in your portfolio. Thank you.